Okay, we're back with another installment of Romeo CRT 2023 trade reviews. This is going to be trade number 6. This is a Great British Pound US dollar Forex short that he posted on February 16th of 2023, or that not that he posted it on that date, but that that's his analysis. So let's take a look at the trade. So in the before picture, we see a turtle soup from right around Valentine's Day already in progress. We see that the previous high, the old high, right below one spot 22, has been turtle souped. This is the 4-hour chart, by the way. And then price has moved very aggressively lower from that candle wick high. That's probably like either the late on the 13th or the 14th of February there, and it formed not one but it actually formed 3 fair value gaps on its way down. And I just want to call you, it formed 2 very large bearish fair value gaps on the way down. I want to call your attention to his annotations here, because this is the first time I've seen this, and I don't know if he's mentioned it like on any of the kind of the information that I've been consuming, but he has an annotation to remain unfilled. So I want to look at those fair value gaps and why he's so confident that the reversal will occur in the lower of the 2 fair value gaps, and why even if it gets a wick into the second of the 2 fair value gaps, that will remain unfilled. I mean, for a fair value gap to remain unfilled, the wick can't exceed the low of the first candle that forms the fair value gap. So let's go to FX replay and I'll explain exactly what I mean by that. Oh man, my computer is glitching. There we go. Okay. So here we have on the daily chart, and I've got the fair value gap annotated, and I've got the draw on liquidity that he has, and I also have a higher time frame draw on liquidity. I want to give this trade a little bit of context before I jump into some of the details about these consecutive fair value gaps and the top fair value gap being unfilled. So what we have here is the January open to the year of 2023 was a kind of a very quick turtle soup of the November lows, or that late November weekly low there, and we're bullish on the pound, but because of the quarterly, like if you have a bullish yearly candle, then you might have to wait until March, right, to fully get long on the bullish yearly candle, because of the dynamics of how candles print over time. If a yearly candle can be compared to a daily candle, then January would be like 5 p.m. Eastern Standard Time on the daily candle. So you're not really going to see too many entries then. You're going to have to wait for accumulation and then a manipulation to occur, where the manipulation is occurring. Maybe it's during the early London session, or maybe it's during the 3:30 a.m. to 5:30 a.m., or maybe it waits all the way until New York Open. So the yearly candles can function the same way, can look the same, and this 2023 yearly candle in the pound is no exception. So we see a very rapid turtle soup within the first few trading days of the year. We see relative equal highs form. So the relative equal high matching the high in December here. And then we see some retest of internal liquidity. And this retest of internal liquidity in the pound specifically gets a lot more bearish. And I think that's what Romeo is trading with this daily turtle soup of this level here. But anyways, we're already a few days into the turtle soup forming. So now I'm going to switch to the 4-hour chart, and this is his analysis. So this matches the PowerPoint slide now with this view. So you have the 4-hour chart. This is your draw on liquidity. He has this very large fair value gap on the chart, and he's indicated that the reversal is going to, that it's this zone in which price is going to reverse. So this is essentially like a kiss of death entry to go short, and he's quite confident that this will remain unfilled. To remain unfilled, he has it annotated. So why is he so confident that this will remain unfilled? Well, the accumulation that occurs here to set this trade up it's essentially a CRT of this particular 4-hour candle, which broke the low here. And that's what gives you your kiss of death entry. So this is following that same logic. And if we drill down to the 2-hour time frame and we start to count candles, right? You might see it's this candle that starts the range 1, 2, 3, 4, 5, 6, 7, 8, and then start to look for a reversal, perhaps. Though we are at midnight, so we might have a few more, a few more 2-hour candles there. This one might be a good one. A 3-hour time frame might be a good time frame to look at. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so that gets us right to that 5 p.m. So that might be, and then again, the 4-hour might be a little too late for that methodology. We might be on the 5th candle or so before we see a further resumption, a bearish turtle soup. So let's take a look. Let's take a look at the bullish CRT. Yeah, so we actually do have like a 15-minute model number 1 that gets created to be bullish, and this is like one of those grinding pause CRTs of the 4-hour candle. This is going to take many 4-hour candles to get to even the halfway point of the range. The halfway point of the range being there. So we're essentially, we've reached it just before midnight. Well, not really reached it yet, but we're about to reach it. So that's yep. So let's look at the lower time frame reversal here, and we're essentially on like a 3-hour time, a 2 or 3 hour turtle soup time frame, and so our signal is going to be on like the 5 or the 15-minute time frame, our reversal signal. So let's play through the trade, and let's just look at the lower time frame dynamics of how it's all forming. So here we have London open. Okay, great. That's great. So that's a nice up close candle with like a nice long wick into the premium of the 4-hour candle. This being the high, this being the low. And we see some reaction off of potentially like this bearish order block or this bearish breaker. So I'm going to slow it down a little bit, and I'll try to trade frame it for you guys. Let's wait for this candle to close. Okay. Nice bottomless candle too. So I'm feeling that this candle will close below this low, and that will be a model number 1. We could even get down to the 5-minute chart now. Yeah, so we already have a model number 1 on the 5-minute chart. So here at the retest of the candle body, we'll look to get short, and we'll look for the price to not break the high of the 4-hour candle. So something like a 2-to-1 risk to reward. We could be a little bit more aggressive. There's a lot of inefficiency here that I'm noticing, like descending trendline liquidity there, headless candle when we were on the, was it on the 4-hour chart? I think it was on the 2-hour chart. There's a lot of inefficiency, but that inefficiency is for later. That inefficiency is actually for after the open of March. And so the March, to form the doji on the monthly and the quarterly time frames. So let's just continue to play this out. Go back to the 5-minute. This is where you can kind of look for SMTs to form with the correlated asset, this being with the pound. SMT is the euro. And you're expecting a large bearish daily candle to form. To continue basically the price action stabbing down into the draw on liquidity. So that's really nice. Like that's like a full, that's kind of like a full turtle soup of that level there. Let's just, for curiosity's sake, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so like right around there, like that's like a nice turtle soup reversal of that particular high. And the turtle soup reversal plays out. This is technically invalidated. 2 closes above. This being this like 15-minute, but the model number 1, close below that swing low, retest into this wick, right? Nice long wick on the 5-minute chart. So now we're going to start to see some real acceleration into the draw on liquidity. After the completion of this, we'll look at the ratio. Like we'll do like the classic like turtle soup ratio analysis, looking at like the speed of the distribution. It'll most likely it's going to follow the same metrics as far as the ratio goes. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so I kind of decided that it was kind of the 3-hour time frame being the one to like fully characterize this the best. There's a little pullback. It retests like the fair value gap that's formed on the hourly. We're entering the London. We're about to have the London close. So yeah, we're trading the pound. London open. The opening range here. That's accumulation, manipulation, distribution into the London close. We don't quite get to our draw of liquidity that day. Let's see in the PowerPoint. Right. So it's spanning multiple, multiple futures sessions, we'll call it. Price is very fractal, though. Okay, there. So that's the end of the PowerPoint there. So it's kind of funny. The futures market opens here, and then just straight down into that low. So yeah, definitely a great, kiss of death. It's halfway between a scalp and a swing trade for me, just because it does bridge a futures market close and then reopen on the following trading day. So yeah, so let's pull back a little bit. We'll do a little bit of a ratio analysis. It still fits, like this being like, I would call this like the distribution. It's a little slower of a distribution, but it still fits the parameters being like that. If you think this is the low and like how long it takes to reach that low once more on the return trip, then it absolutely does fit the that ratio analysis. So let's just do it really quick, just for posterity's sake. So 18 bars it takes for the setup to fully mature, and then 5 to distribute. So for the payoff, which is that same like 3-to-1 ratio that we look for, slightly north of 3-to-1. It's always slightly north of. It's always a little faster than 3-to-1, which is good. Very efficient trading style. So let's look at. I've got a lingering question in my head, which is, how is Romeo so confident that this fair value gap, the higher of the two fair value gaps on the 4-hour chart, how is he so confident that that's going to remain unfilled? Perhaps he was looking originally for a reversal. Maybe he was looking for a full CRT of the 4-hour candle, and maybe the timing was a little bit more advanced. I noticed that during this trade, I'm not sure if you saw that as well, but that 9 a.m. open, was that news Thursday? So I'm not sure if that was a Thursday, February 16th. I'm not sure if that was some sort of news that came out, but the NY open was very unkind to the pound that day, and I'm not sure if that was like economic news, perhaps. It might have been a CPI release. Actually, though, CPI was actually some really high velocity news at that point in time, just because in early 2023, we were still facing a lot of inflation. So just looking at, we do have that LR right there, and then this breaker, and then the wick of that breaker on the 15-minute chart. So maybe Romeo's thinking that that we can trade up into here, and that will be the ultimate trigger to go lower, and that this actual level here is harder to attain. I had a thought when I was on the daily that this low here, so the daily FVG might get filled, and then at that point you have the wick of the daily candle. So you have this wick right here, and then this becomes a kind of a final reversal zone. Maybe that's the theory, is that the high of this breaker is essentially like I hate to use this term, but it's essentially like a protected high in terms of how the theory goes. So yeah, it's really interesting. I'm gonna look for more evidence of how, if I see another turtle soup that follows this same dynamic, I want to see if I can, and there's lots of them. But the idea is, I want to study this particular constellation here, where you have consecutive fair value gap that are like immediately following one another, and then you have the idea of the first of the two fair value gaps doesn't get filled for a full continuation of the bearish trend into the sell side draw on liquidity. I want to see if I can find other examples of this bullish and bearish, and just look, because I think that's kind of like a cornerstone of not the theory that creates the original turtle soup, but the theory of once a turtle soup has formed and price reaches back into internal liquidity as it pauses. Yeah. So, the other thing is this is like a bearish engulfing candle that completely engulfs this range here. So maybe that plays into it as well, and maybe that's the principle at work here. Yeah, a lot to study for this trade. So yeah, so we looked at the shorter term time frame. We looked at the ratio. I'm trying to think of anything else we could look at for this particular trade, but I think I'm done with this video. Okay, all right. Well, thank you so much for listening.